This recovery looks very different than the recovery from the '07-'09 recession. And it was a different kind of a collapse, too, much sharper but much shorter. So this has been a very powerful V rebound. If we look at the GDP report this morning for Q1, nominal GDP has been running at about an 18% annual rate over the course of the last 3 quarters. Now that obviously follows a huge collapse. So the level of activity is still below the pre-COVID trend growth path, but we are rapidly catching up in a way that was not seen after the '07-'09 crash. And so I think that's really what's going to end up dictating, the Fed having to move sooner than where some of the consensus forecasts are.
So one more question, and I thought it might almost be fun to set up some kind of debate between yourself and a guy like Dave Zervos, who I think in many ways you guys have similar views about the stock market, but he differs on where he thinks inflation is going. And he doesn't really see it being kind of a consistent problem. And even the Fed keeps using this word transitory. So it's almost as if you're describing that an economic boom is what they're responding to more than an inflation problem. Is that right?
Well, I think the boom is coming first. The boom is here. We can see it in all the data. We can see it in the forward-looking indicators. Jobless claims are dropping like a stone now, and confidence is surging. So that's all great news. But I think what happens next year when the economy is back on that pre-COVID trend growth path and the labor market is essentially fully healed, at that point, you really don't want boom conditions for aggregate demand unless the supply is there to meet that demand. And that's where we could get into more of a complicated scenario with inflation. And keep in mind, you have the S&P 500 enjoying a 23 forward multiple now. So in an environment where inflation is likely to move higher and market interest rates are likely to move up, and potentially we could get a material rise in tax rates on capital, those would all go down in my book as headwinds to valuation. So some things to think about as we move forward.
Shepard Smith here. Thanks for watching CNBC on YouTube.